This is a video that starts with a trade I took on 11/16/2011 on the ES for Renko. This is the trigger bar right here where I drew a vertical line through the chart, and the action bar is right here where I actually took the trade. And this was a fade the gap type trade where these purple dots were yesterday's close and the yellow dots are today's open, and obviously the market gapped down, and to fade the gap you would go long in here, and with the anticipation that the equity will go up to the level of yesterday's close. And I didn't take any trades along here, but because the indicators simply didn't line up appropriately, so when I took the fade to gap trade, it was because the indicators lined up indicating there was going to be an up move. And it's almost like having a crystal ball with the triangle trend system of trading, in that I knew that the trade would go up to yesterday's close and would lose steam up here as it hit resistance. And so this is where I got out of the trade right here. Now this was a 7-point trade, but that's not the purpose of this video. The purpose of the video is to indicate that noise is an enemy of the trader. Now, whether you call it choppiness or whether you call it consolidation, noise to me is a number of bars on the chart that don't go anywhere. And this is noise right in through here, by the way. These bars are just up and down here, didn't go anywhere, and so the indicators never indicated that there was a trade to be made along here. But I want to illustrate, if you were trading either 2 Renko or 2 range or 4 range or 500 ticks, the amount of noise you would find in those bars compared with the amount of noise here. Now once the trend starts and you enter a trade, you can see how smooth it is. Each bar sits right on the hypotenuse of this triangle here, and until the triangle ends by forming this bar right here. Now the significance here is that between this trigger bar here and the action bar here, where I actually took the trade, there was 6 minutes and 51 seconds of time went by right in here. 6 minutes and 51 seconds. Now I want to show you how much noise there is on other charts during that same 6 minutes and 51 seconds. Now here's a chart of the ES2 Renko, same time period, same day. This is the same 6 minutes and 51 second time period from here to here that you saw between the first 2 bars, the trigger bar and the action bar of the 4 Renko trade. So all these bars occurred during that time period, and they are all just noise. However, if you were trading the 2 Renko, you might have been tempted to either exit the trade or go short in here or do something else non-profitable. Now here's a chart of a ES2 range bars on the same date, 11/16/2011. Now you can see here is the same 6 minute and 51 second period of time on the 4 Renko chart between the trigger bar and the action bar. Nothing in between the two. But if you were trading 2 range bars, you would have had all this garbage, all this noise in between here, which you might have been tempted to trade on the losing side. even if you were trading the 4 range bar chart, you would have still had this amount of noise in between the trigger bar and the action bar of 6 minutes and 51 seconds. So you still might have been tempted to either maybe exit along right here. So you can see that even with the 4 range bars, you're better off trading the 4 Renko. Much less noise. Finally, here's a 500 tick chart, and here's the same 6 minute and 51 second period of time between the trigger bar and the action bar on the 4 Renko chart. So you have this much noise on the 500 tick chart. Again, there's always a temptation of making a bad trade when you have this many noise bars, as I call them. So I hope these examples have convinced you of the efficacy of trading 4 Renko bars over other bar lengths or bar types.